With 2024's big runs on the price of gold and silver, there are people out there, and maybe it's you, looking to sell. Take those gains and run. Well, you have some things to consider that you might not even be thinking about. And if you're saying to yourself, well, this doesn't apply to me because I haven't even considered selling, well, Ben Franklin did a pretty good job summing this up. The only things certain in life, death and taxes. With gold making a 28% run in 2024, we can assume somebody out there thinks that, hey, it is time to sell. And it doesn't even matter if you're one of those people or not, because there are rules to navigate that apply to every single one of us. It's going to affect how and when and why we sell. Want to free up capital for something else, down payment on a property, maybe pay off a mortgage, unexpected emergency. Well, there are tax implications if you want to convert that gold or silver that you're saving into cash. Doesn't matter what reason it is. The tax man is going to want to come along for that ride. Now, there's some really important changes to reporting requirements that you might say clear up a lot of confusion, but between us, it seems like maybe it's actually made things more confusing to some people, and I know this because I can see the comments on a video that I made on this topic years ago, and I'm surprised that video still works. I thought maybe they'd get all scratchy and break down eventually, but no. So we're going to get into the tax implications first, because however you look at it, the requirements are going to be the most important thing you need to know. I think Sun Tzu said this best when he said, know your enemy. Now, I don't think he was talking about the tax man, but we just don't know. That was a long time ago. But I'm pretty sure he wasn't talking about sales tax when you buy. Some states, they tax precious metals purchases, but most don't. Now, the state rules change, so I'm not going to go into that. I'll just say that whatever it is, it affects your acquisition cost. And we're going to come back to that because that is used to figure out gains or losses. Okay, quick break from thinking about selling. For a shout out to channel sponsor Summit Metals. If you want to keep that acquisition cost low, well, you're in luck because Summit Metals has low prices. Be sure to check them out at summitmetals.com. Now, the most important part here is what happens when you sell. That's what we all need to know. The part that's confusing, though, is the difference between what is owed and what is reported. That's going to come up when you go to sell. Now, if you sell your gold or silver for a profit, the IRS classifies that as collectible. Considers any profit a capital gain. So if you're in the United States and you hear somebody say that a sale is not reportable, well, that means that the dealer doesn't have to report it for you. That doesn't mean that you're off the hook and you don't owe capital gains tax. Now, on the upside for all of you, I can't tell any of you what to pay. I can just tell you what the rules are and hopefully clear up a lot of this confusion. So just starting out, if you held gold or silver for more than a year, that is a long-term gain. It's taxed at a maximum of 28% because, again, the IRS considers gold and silver to be a collectible. Now, if you held your gold or silver for less than a year, well, now short-term gains apply, and those gains are taxed as ordinary income. So far, pretty simple. Example, if you had purchased 10 ounces of gold over the years, and I think this is 10, and your average acquisition cost, including storage fees of this 10 ounces of gold, were to add up to, say, $20,000, and then you sell for $27,000, well, the $7,000 delta is the part that you're taxed on. That's ordinary income based on your tax bracket with a maximum rate of 28% if it was held longer than 1 year. So in that case, the IRS would expect $1,960 from you. So fairness aside, that tax requirement, it's pretty clear. The biggest confusion probably comes from the word reporting. If you sell one of these, you're not going to trigger certain thresholds I'm about to talk about. You self-report. Now, the IRS will only know of your sale because you tell them. But in the event that you do hit those thresholds, well, somebody else tells the IRS for you. So if a dealer says something isn't reportable, they probably mean they aren't obligated to report it on your behalf. Now, why would a dealer do that? Well, there are two likely cases here. You either get a Form 1099-B or a Form 8300. Those would be reported on your behalf. Now, Form 8300, that's required for any cash transaction exceeding $10,000. That isn't bullion specific, though. That's just an anti-money laundering requirement that gives the government a little bit of a nudge to let them check to see if you're doing anything sketchy. Now, again, that's a transaction with a dealer. We're going to hold on private sales for a minute. Okay, so a Form 8300 is about anti-money laundering compliance. A Form 1099-B Well, that's specifically aimed at reporting and calculating your gains. It makes sure that the IRS gets the full amount. So the appearance of a Form 1099 on your account means you will be calculating, reporting, and paying either a gain or a loss, and you may be required to prove your initial cost basis. So the dealer's obligation to report a Form 8300 is based on the total amount. Their obligation to report a 1099-B is based on what you sell, and those requirements have just changed. This is really important because the prior clarification put a target on gold maple leafs, Krugerrands, and Mexican Onzas. That just went away. Again, that doesn't mean capital gains no longer apply to those coins. It just means the dealer is no longer obligated to file a 1099-B on behalf of the seller. The new list of items falling under this requirement looks to be very specific to people trading large volumes of metal. So 100 ounces of gold bars or 3 kilo bars. That used to be a single kilo bar. 5,000 ounces of silver bars, I think that's now 5 times as much, and 50 ounces of platinum bars, but it really doesn't apply to any of us. The big change here is that maple leafs, Krugerrands, and Mexican Onzas no longer appear on this list. Selling 25 ounces of any of those three would have previously triggered a 1099-B reporting event. Congratulations. Same goes for 90% constitutional silver. If you sold junk silver with a face value that exceeded $1,000, well, you would have gotten a 1099-B. So this is a much smaller list of reportable items, and that's a really big deal. Why is this a big deal? Well, the difference between a Form 8300 and a Form 1099-B is important because the latter means you could be required to prove your acquisition cost. So look, I would never get on a soapbox and tell anyone to not report a capital gain, but I would point out that a Form 1099-B requirement can be a big pain if proving your cost basis is going to be difficult, because if you're forced to prove it and you can't, the actual gain you're being taxed on could be much higher. That's why I'm pointing this out. So none of these reporting requirements are different than reporting gains or losses for art, for Pokemon cards, or different asset classes, even like stocks or real estate, except for the amount. So if you make a gain on a gold coin, yeah, the IRS wants a cut just the same as anything else. Now, what a lot of people lean into here is that sometimes sales of these gold coins go unreported. And technically, it's not hard to avoid a reporting event. Did you sell to your neighbor, or did you lose that gold in a tragic boating accident? Who's to say? Technically. Now, the other possibility here that we really need to all know about is if we never sell. You go to your grave owning a pile of gold and silver, and your kids inherit it. What happens if they go to sell? Well, they all have the same reporting requirements, but the key difference here is that their cost basis steps up to the time of inheritance. This is huge, and this is something people get wrong all the time. Not only do they not have to prove their cost basis, they don't have to pay taxes on gains made prior to them owning it. So if you bought the gold at an average of $2,000 an ounce, I talked about that earlier, and the price shoots to, I don't know, $5,000 an ounce by the time they inherit it, they use $5,000 as their cost basis, not $2,000. Now, why am I getting into this topic, and why is this important to you? Well, the liquidity and the estate planning angles just don't come up around here. I have a video on the topic from a few years ago, and the comments section is just full of people who didn't know sales were even taxable events to begin with. And then there are people pointing out how easy it is to just not report, and there are even people in there who say they don't pay taxes at all. I mean, I always assume that's an IRS agent creating a honeypot, but this video is not about any of that. This is only about the rules. If you intend to move large amounts of gold or silver outside of a traditional or a Roth IRA, you need to know the rules before you do anything, not after. Now, between us, smaller sales and private sales feel a lot less restrictive, and that's what a lot of people probably have in mind. Now, I've sold at a loss in the past, and without a 1099-B, I could technically report that loss the same as I could report a gain, and I wouldn't have much scrutiny. But the only reason that I point this out is that it becomes a lot more like a tree falling in the woods with nobody around to hear it. This is the boating accident joke, and I think that's what most people think about. Sorry, sir, I didn't make any capital gains. I lost that years ago. If you know the rules, though, you don't have to skirt them. You can just approach a sale more strategically. I'll give you an example of that. I have semi-numismatic coins that I bought at a high premium that just haven't panned out. They probably haven't appreciated. And if I was selling today with spot price making a huge run, well, I would sell those first because that would minimize the gains. particular coin, it's a bad example because it's still popular. But if I bought it initially for $2,700 and then I sold it for $2,700, well, guess what? No gain. I could do that rather than sell coins with really low cost basis, coins that maybe I purchased in 2008. I can put those coins in a pile and give to my kids when I die, and their cost basis steps up. Or maybe I just hang on to them until the tax rule changes. Who knows? It might actually pan out. Okay, I've been trying to talk fast here because tax law is boring and I'm not a tax professional, but I think I implied I was going to get all that out of the way first because there's this whole other spectrum of just reasons why maybe something won't be reported. And not my reasons, just use your imagination. If you're big on the barter idea, I'm sure you already have some ideas, but mostly this was about big sales, getting out of 10 or 25 or more ounces of gold at a time. Maybe you're paying off a mortgage. Maybe you're buying a property. Maybe you just want a bunch of capital to put it all on some internet roulette meme coin. Whatever. Those events are always going to create paper trails, and the taxman is always going to want his cut. So let's be really clear here. Tax planning is not a bad thing. I'm pretty sure Trump said only stupid people pay taxes. You might want to fact check me there, but tax planning is smart. Now, small one-off sales are always going to be less stressful. It might even be something that you want to work into your plans. It's one of the reasons that people advocate for fractional, like you showed earlier in the Summit Metals wallets, quarters, tenths, whatever. You don't get into the big numbers with people submitting forms on your behalf, and you don't run into the possible case where you can't find a receipt showing how much you paid for it in the first place. I had a tax agent once try to scare me with this idea that I would be on the hook for taxes on 100% of the sale if I couldn't come up with a receipt. I think Susan was just having a bad day there. Now, look, I'm not worried about paying taxes. I guess it's even the patriotic thing to do. I just want them to be fair and clear, or at least in this case, to be more fair and more clear. Now, let me get one final thing in here. I am not an IRS agent. I'm not a tax professional, so you're still going to need to verify all of this. The easiest way to do that is to just ask your dealer, because I think it's going to be a while before the specific changes to that reporting requirement are widely known. Now, you can see the basis for all of this in a draft on the IRS website. I'm going to link to that below, but I really can't say anything for sure beyond that. So caveat emptor, which I think is Latin for I'm just some guy on YouTube. Okay, let's call it good there. Let us know what kind of boat you had on that tragic day when all your gold and silver was lost. Now, I can't help formalize anything. I can't help you prove anything to the IRS, but I think we can all agree that it's a real risk losing that gold and silver at sea. Terrible thing. Anyway, while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.